Good afternoon, everyone, and welcome back. I'm your friendly neighborhood PM here to deliver you your weekly video as always. Now, it is a long 3-day weekend coming up, so we don't want to belabor the point or take up any more of your time as you're trying to rush out of the office and go enjoy that long last summer vacation. Now, let's get right into your top 3 points of the week. And at the third point, I was really tempted to put this at number one just because it's a little bit frustrating to me. It is Charter Communications and Disney having a little bit of a spat right now over rising fees, predominantly for programs such as ESPN. So Charter doesn't want to keep paying these long-term contracts for these rising fees that ESPN and Disney are kind of pushing to cable providers. So what did Disney do in response to that? Well, they yanked all of their channels from the cable providers. So that means cable networks like Spectrum, which impacts 14 million customers. So if you're a Spectrum provider or a Spectrum customer, you probably noticed last night as you were trying to watch college football that you couldn't watch that game. And that is also probably going to impact you trying to watch Monday Night Football in this upcoming NFL season. So I would like them to kind of resolve that because I got to watch my fantasy team lose in high definition preceding this entire season. So at point number 2, it was core PCE only increasing by 0.2% this past month. Now that is the smallest back-to-back monthly increase since we've seen since 2020. That continues to show us that this is, the Fed's preferred inflation index. And what's that really showing is that monetary policy is still working its way through the system. We're continuing to see that moderating inflation. So we're on the right track there, and we're seeing some of those price pressures continue to ease. Finally, at point number 1, it was the data point that came out this morning. It was non-farm payrolls increasing by 187,000 this past month. Now, that does still sound like strong, resilient demand labor market, which it is. But once you couple that with slowing wage growth, jolts coming down as well, you are starting to see more of a cooling effect on a gradual scale in the labor market, which is very key for the Fed's fight against inflation, as they have continually reiterated that they need to bring the demand and supply imbalance in the labor market into a better concert in order to reach that 2% inflation target. So still resilient demand, but we are starting to see some cooling on there, and we're going to see some, price pressures continue to ease as a result. Now, that pretty much does it for your top 3 points of this week. Now, what are we looking forward to for next week? Next week, we're looking at the Fed's beige book that's going to come out. And that's just going to give us some more, qualitative commentary as to economic conditions across various districts, as well as what's been driving growth so far in this past quarter. But that pretty much does it. We tried to keep it pretty brief so you guys can go enjoy that long weekend. But go ahead and dig into the weekend review or reach out to your financial advisor if you have any additional questions. Otherwise, go have a great weekend. We'll see you same time next week. Thanks. Bye.